What's up, everybody? Thank you for tuning in to the September Mark in the Moment. Here, I am Austin Acid. I am with the
Stewart Team Homes. Sean Stewart here with Austin. We're going to go over the market of the moment, and we're going to jump right into things. And Austin, why don't you take over, and I'll add my 2 cents as we go along.
Okay, awesome. All right, so yeah, rolling into the first set of slide here, we have the current real estate market looking at the inventory. The lighter green bars we're looking at here is the amount of homes that are up for sale. The darker green bars is the amount of homes that actually sold. The red bar is the amount of homes that went under contract and pended, and the blue bar is the amount of homes that came on the market as new listings. This is across a 3-year span, and if we look where we're at today, here in the month of August for the last month, we currently have 7,114 new listings that came on the market, which is about 11% decrease since July. We have about 6,794 houses that are currently available for sale, which is almost a 2% increase since the month of July. We have about 6,015 houses that actually sold, which is about a 2% decrease since the month of July, and about 7,226 houses that are pended and went under contract, which is a significant increase since last month, up 15.6%. So kind of going over what all those numbers really mean is inventory, the amount of homes that are available, has been on a constant decline. And here, ever since COVID hit, we have been an extreme undersupply. And most recently, the past couple months, we had a little bit of separation in regards to the amount of homes that came available as new listings. We saw the amount of homes that pending one under contract in the winter months kind of surpass the new listings. And we may see this start to occur again as the first point in time where the amount of new listings actually is starting to cross houses that pended. So we may see a shift where a little more competition is going to start occurring, similar to what happened at the end of 2020. Sean, do you have any input on this?
Well, if you look back at a year ago, we did have that gap that you're talking about. We had more for sale than actually sold. We had more new listings than actually pended. So, and that gap continued until, we hit in the towards the end of the year. And that's seasonality kicks in there. We had seasonality as well as the beginning of COVID, that you can see where the gap again closed in that February, that March timeframe of 2020. It's the question that we always get when we're in the real estate business. Is now a good time to buy? Is now a good time to sell? Is the market going to crash? And I think, what we're going to see here with this statistic and this graph, and moving forward, looking at the other graphs, that we can't predict the market, number one, and that it really is a good time to buy. It's just an extremely active market that you have to be paying attention to. We still have more sales and more new listings than we've had in the past 14 months. Yet, we're seeing a downward trend on the new list side again, and an upward pending since the beginning of the year. It just continues to rise. So those pendings mean there's a lot of active buyers out there.
Yeah, those are good points. All right, taking a look at the average sold price and list price for the houses here in the market. The lighter green bar is the average for sale prices. And currently, this past month, the average active price was 284,000. In comparison, since last month, that was 284, which is about a 0.5% decrease. Average sold price, it currently is at 227, and that has been a decrease almost of 1%. In July, it was at 229,000. So taking a look at the yearly trend, home prices are continuing to appreciate, and from August of 2020 to August of 2021, it's 11.8% increase in the sold prices.
Yeah, and I see that, that trend is going to continue. Again, it's the question, well, should I wait till next year to buy? The reality of it is the prices for sale, I think, are coming down a little bit because sellers are becoming more real. It's more realistic. You're not testing the market. The buyers are getting a little bit wiser, and not we are still seeing multiple offers, but not like we did at the beginning of the summer. That has started to slow down a little bit. Now, I just say a little bit, rather than 6, 7, 8, 10, 12 offers on a property, we're seeing 2 or 3. And, sellers that are attempting to take advantage of the market and overpricing their homes, the houses aren't appraising. So the banks are saying, no, we're not going to lend a buyer money because the house isn't worth it. And buyers are tired of overpaying for property. So that little bit of pressure on sellers are making sellers more realistic. And even that being said, it's still phenomenal time to cash out on equity. If you're a seller, you're still getting more money for your house than you could ever get before. It's a tremendous seller's market. So I think, it's a market that we're going to show, I think, that both buyers and sellers can win in, rather than waiting. It's a advantage for both your being a buyer and a seller. So, that's some of the things that I see, and the average sold in at list price, when we're in our market, our buyers and our sellers, and even ourselves as real estate agents, I think we look at it with blinders on and say, we can't believe how much things have appreciated and how much a house cost. We are still here in Northeast Ohio, one of the 10 best markets for value in the entire country. So we can buy so much more home, comparatively speaking, than anybody else throughout the rest of the United States. And that has a lot to do with, our income levels compared to what the houses cost. We're still at a great advantage. And for a buyer, houses may seem like they've increased a lot, yet compare that to what it costs to rent a place on a monthly basis where you're not building equity. It's still a tremendous time for both buyers and sellers in the 2021 real estate market.
Yeah. And then at the end, we have a good image to show, actually put things in perspective. Buying right now in this market with a low interest rate comparison to, if home prices were to decrease, higher interest rates, what your actual monthly payment would be. But that's at the end. Moving along going along with kind of where prices are at, a good kind of correlation is price per square foot. Past 3 years, this number has increased. We saw a slight little dip because, going along with the home prices that dipped a little bit. So did the price per square foot. This is at a decline of about almost 1% from 132 in the month of July, and here this past month in August we're down to 131. So this has been increasing over the past couple years. And taking a look at this graph right here, we're looking at the average days on market, which is the orange bars, and then the sale price to original list price ratio, which is the green bar. And starting with the sale price to list price ratio, as you can see, it's a little bit hard to see, but the first time it went over, it touched about 100%. Basically, so if it's listed at 200,000, on average, the house is sold for 200,000, which is the first time in basically recorded history that this has happened. And this past year, we saw it peak at 102%. So houses were going 2% over what they're asking. This is the first time we saw a slight dip, and it's currently at 101%. This may be going back to what Sean mentioned, that homeowners and sellers are being a little more realistic of what the home may be valued and worth, and not just testing the market and just throwing a number out there and hoping to get a higher number. Buyers and buyers agent have good comps based on the recent sales, so they're basing their numbers off that. Same thing with the listing agent; they're basing off of recent sales. So, you got the meeting of the minds of, hey, yeah, this is the current market value of the house, and that's where kind of the prices line up. And then taking a look at the average continuous days on the market, this has been the lowest it's ever been. Currently, the average days on market is 32 days. So essentially, when houses come up for sale, they're going off super quick. To give you an idea of which houses are going quick and which are not, houses that are newly updated and cosmetically look good, these are the houses that last a day, 2 days, and quickly go under contract. The ones that last a little bit longer is either if they were priced too high, or if there was some cosmetic updating that buyers may felt that it's not up to date comparison to the other ones that are flying off the shelves, or just a little bit more work compared to like a move-in ready house. So those are kind of the two houses in the varying scenarios.
Yeah, the only comment I have on that is, if buyers, let me say first, if sellers are itching to get their house on the market, and in our area, and they want to do it, and they want to do it fast, they want to do it before the snow flies, now's the time. The market time is quick if you have that house in good condition. If it's going to pass inspections, if you have it so it's show ready, because buyers right now, they need to stay focused, and they need to be in the market and active and ready to go at any moment, because when that right house hits the market, the one that's priced well, the one that shows well, the one that's going to appraise, and it's going to it's in great condition, so the inspection will be not an issue. They are flying off the market, and so a buyer that hesitates loses. I often say in real estate, speed is your friend. You have to be fast. And this is what this graph is telling us. So you don't want to drag your feet if you're a buyer, and you want to be working with an agent who doesn't drag their feet either, or you will lose, and you don't want to lose out on a house. So that's the market right now, as I see it. So next graph.
Yeah. So for this graph, what I did was just, if you take a step back and get additional perspective where we're currently are actually at, I pulled up the past 15 years from 2021 to 2007 and give you an idea of the complete opposite markets of where we're currently at in a seller's market, undersupply, comparison to 2007, a buyer's market where we had an oversupply. August of 2007, when we had the housing crisis and housing prices actually declined because of the oversupply, we had about 44,000 houses available to choose from. Of those, 4,755 sold during that month of August. On the other hand, today we only have 6,794 houses available to choose from, and 6,015 that's sold. So basically, the amount of homes that are for sale, you have the same number of houses that sold. So more houses are selling now compared to 2007 when we had basically 44,000 houses available. So, this is really what's driving these home prices, supply and demand, along with low interest rates. But um, as you can see, also the new listings, the blue bar, it has declined from 2007. You had around 10,000, and it has declined to you're around like a 6,000 range. And the red bar pendant has increased. Basically, houses coming up, they're quickly coming off, and we haven't had a sticking point in regards to getting in more of an even market, where a buyer and seller market, more balanced. Like right now, we're in extreme seller's market, and this is the data to explain why.
Yeah, showing this and living in that market in 2007, and selling all the way through today, I can share that it's pretty unlikely that we're going to see a market crash in the next 2 years. House prices are already, we've seen an increase in the housing prices through the past few years. We have not seen any decrease in regards to the amount of houses that are being taken off the market. Basically, in the past 15 years of any significance, the amount of homes that go under contract remain pretty steady. It's just the fact that we don't have the inventory. And without having an overabundance of inventory, there's nothing to crash. So,
Mhm.
and right now, the economists at the beginning of 2020, end of 2020, and beginning of 2021, we are outproducing the predictions that they had. So, and that's a good thing. It really is a good thing, and it's a good thing for the economy. We're still in a strong market, and will remain in that strong market for the remainder of 21, and I see throughout 22 for sure.
Hmm. Yeah. And then also, I want to touch on real quickly, the reason why we had, if you look prior to 2007, we were up above 10,000 new listings. The reason why we had that significant amount of homes that came available is because we had um, a mortgage crisis. We had bad lending practices, buyers who would qualify for a certain amount when they shouldn't have, not doing their due diligence in regards to income verification and credit score verification. Um, and over time, these borrowers or buyers who qualified for a certain amount, over time they weren't able to make those payments because that income or credit score wasn't very accurate. So the inventory had a spike in regards to where the demand was, and that is why prices decreased. Um, the only way for prices to decrease in like right now in this market is if we have a complete shift in new inventory to exceed the demand, or interest rates skyrocket to like we never seen before. Those
And the
are
Fed
kind
won't
of
let that happen because it's not good for the economy.
right. So, home prices are here to stay and will continue to rise. Going back to the interest rates that I mentioned, which is um, influencing the demand here in the market. Currently, for a 30-year fixed rate mortgage, it's at a 2.87%. If we were to widen this graph and put things in a better perspective, we had a decrease ever since. You think about 2 years ago, we were around 4.5% interest rate, and we thought that was all time low. And you go back 10, 15 years ago, where we had 8% interest rate, 10% interest rates, where at that point in time you thought that was an all-time low. So interest rates have continued to decline, and we basically hit the rock bottom in regards to a number where banks make money because they're in the business to make money as well with a mortgage loan. And this is basically as low as they can go. And if you're a buyer and borrower, this is a great time to purchase and get a loan. And then
Yeah,
take yeah.
there really doesn't seem like there's going to be any significance in regards to any increase. It may tick up, it may go back down, but the annual average interest rate has kind of just hung out there around that 3% or lower, and nothing tells us that it's going to increase very much at all, if at all, throughout the next 12 months.
Mm-hmm. Um, just kind of summarize where we're at here today in this real estate market. Inventory is still basically at an all-time low. It's the supply, the amount of homes that are available is still an issue. The market is still competitive. Sean mentioned instead of the super competitiveness in regards to 8, 10, 12 offers, now there may be only 3, 4, or 5 for those well-desired, well-priced homes. So competition is still there, but not as much. Also, if we see a house that's been on the market for, let's say, 10 days, the market's telling us something that it's overpriced, or maybe there's something a little bit wrong with it. But if it's sitting on the market, as a buyer and buyer's agent, can help guide you through this kind of unique market. Home prices continue to rise. Interest rates still remain at all-time low numbers, and we're still in this extreme seller's market.
Yeah. One thing I think, Austin, that is imperative for buyers and sellers to realize is that we have seen the crazy increase in value happen over the past, 3-4 years. And I mean, when we're talking in the teens in regards to, home value increases, into the 20s, across the country, I think the average is like 28%. So that may slow down, yet we're still, economists predict through today in 2021 all the way through 2025 that we will still see growth in home values. Now, they may not be double-digit growth, yet it's going to be 4 or 5% each year. Now, that's still growth. That still means the house is going to be more money. And what I think you have one of your the last graphs you're going to show is, with the interest rates going up, you're still going to be paying more for your house. So don't wait. The homes will be more expensive next year. They'll be more expensive than 2022 and 2023, and so on and so forth. So don't wait. The thing that you're betting on is the interest rate not changing, and that's a bet I wouldn't make right now. Not for. I think we're good for next 12 months, but I don't know about after that.
Yeah. So based on the data and statistics, we do predict home prices to continue to rise. If you were unfamiliar with the data and statistics and you thought the market was going to crash, let's say, and you believe that the home prices were to decrease, okay? And if that was to happen, taking a look at this graph and this picture right here, you bought a home now at $350,000, and using the relatively where we're at today with the interest rates, your monthly payment is around $1,400. And let's say the market was to crash or correct itself down to $300,000, that means that interest rate will also increase. And let's say they go up to the 4.5% where they were 2 years ago. That means you're actually paying more for the home at a lower purchase price compared to a higher purchase price at a lower interest rate. So if that doesn't help display that now is the best time more than ever, I don't know what is. So thanks for tuning in. Be sure to like, share, and comment if you have any questions, or if you're in the market looking to buy or sell, we'd be more than happy to reach out and see if we can help you out. I am Austin Acid, and that is Sean Stewart with Stewart Team Homes. Thanks for tuning in, and be sure to tune in next month. We'll do a larger recap of the year. Thanks for tuning in.
Take care.